Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a market update video for you. It's been several days, so I have a few things to cover with you. Obviously today is October 20th in my time. It's a little after 7 o'clock, but a little before 8 o'clock actually my time. So the weekly close was almost an hour ago, so that was the reason for a video. Before I jump into the content, do me a huge favor, go ahead and hit the thumbs up button in this video, and don't forget to subscribe to the channel. I want to give you guys a little bit of an update. I'm not going to be doing the videos every single day anymore. I'll try to do at least one a week, maybe two a week. It seems like, number one, I'm repeating myself a lot because there's just not a lot of new changes in the market. And number two, there's only a few hundred people watching the videos. So right now, spending 10 or 15 hours a week doing videos and editing videos and creating thumbnails and all that kind of stuff, it's really hard to justify that time. Also, I've got to be honest, I'm cutting back on a lot of my social media presence other than Twitter because it's just easy to pop something up real quick. But like on Facebook, I went and deleted over 3,000 people off my friends list, for example. I'm just a little bit tired of the negativity, right? You can go back, you can look at my post, and the people that follow my post using proper stop losses and everything, I'm sure they're very, very happy right now. But it seems like every time some new person stumbles on my content, they want me to prove myself. They want me to prove that I know what I'm talking about. And frankly, I don't have the energy to do that anymore, right? It was always about helping people, and it's like, I'm not going to sit here and try to convince somebody to learn to trade, right? If people are so naive that they think hodling is the way to go, then by all means, hodl. But maybe after they lose a ton of money, like I did, right, they'll realize, hey, shit, I should probably learn about technical analysis. So anyway, that's where I'm at with that. I'm going to continue doing videos, but it'll probably be like one or two a week going forward. And then once more people subscribe to the channel, and if it becomes worthwhile, then I'll start doing more. So let's talk about the market. First off, let's talk about where I'm at with my trading. I closed all of my short positions Friday morning, down around 7,900 bucks. I actually went long on Bitcoin at 79.11. I know that's crazy. It's not that I'm a bull, though. I want to be very clear about this. I am not a bull. I only went long at 79.11 because I wanted to play the bounce. And because it got so choppy, this is a 4-hour chart here, but because it got so choppy, I entered it. I have to look at the 4-hour to tell you where I entered. Entered right here. Friday morning, right after 7 o'clock a.m. my time is where I entered. But then what happened was it just kept chopping and chopping and chopping. And like right in here is where I entered. I ended up getting out of position during this chop. Now I took a win on it, but I was shooting for 8,600. I'll tell you why in a second. So I'm a little disappointed in myself now that I got out, but I just didn't feel good about it. I knew I was fighting the trend. We're in a downtrend, so going along was a little bit risky. So I took the small win and jumped out. If we look at this on a 4-hour though, we actually were in a descending wedge, which I think I talked about in my last video. We broke out of this thing, came down, consolidated on top of it, which is a very bullish sign, and then we mooned off of it today, which was great if you're a bull. Also great if you're a bear because it gives you an opportunity to open your short higher up, right? What I was personally looking for, I was looking to open a short at this 83.81 level. That's why it's drawn on there. If you're like, James, what is that? Remember that was that neckline of that W, right? We had that big W over here, down, up, down, up. That was that neckline that held so solid. So I wanted to short it, but I slept most of today, so it didn't get there, so I missed my short entry, and now I'm just waiting. I'm not going to chase this. I'm not going to say, you know what, I'll just short it to 8,200. No thanks. Been there, done that, right? If it just kicks the bucket from here and heads down, I'll just miss the short, and I'll have to wait for a better entry. I'm hoping that it gets a little bit more of a bounce, maybe even a bounce up to this target of 8,500 would be really nice, but I don't see it. I don't think it's going to get there. But maybe, right? We're not yet overbought on the 4-hour, so that's kind of a positive sign for the bulls. But when you look at the hourly, it's extremely overbought. It got all the way up here to over 82, right? And now it looks like it's trying to come back down. So I expect, here's what I want. I want it to go to 83.81 so I can short it, 83.81 and put in a setup. But I don't think it's going to get there. I think it's probably going to come back down, and I'm going to be like, dang, I missed it. So we'll see. We'll see. On the that's the short term, right? On the bigger picture, though, right? Nothing has changed, guys. Nothing. It's the same old story. Same old story. if we look at this, this is a daily chart, so I'm going to turn off the RSI for a second. I felt like we were in a bear flag, right? Down, consolidate, and then down further. I still feel like we're probably in a bear flag. Still feel like this thing is probably going down, right? So we'll see how that plays out. One thing I want to point out on this daily chart is about a week ago or so, I said that, you know, people were talking about the death cross and it wasn't really that important because it wasn't close to happening yet. Well, you know, now, about a week later, it is getting close, and now it's definitely something that I would recommend keeping an eye on. The orange line, which is your 50 moving average, is sitting around 91.28. The blue line, which is the 200, is sitting right around 88.47. So they are starting to converge. And the last time we had a death cross was back here in March of 2018, and you can see that things got really nasty after that. So, you know, I suspect we probably are going to have a death cross, and we probably are going to move down. The funny thing about the way market sentiment works and just kind of emotions in general is people are so biased to what they want to happen that they often ignore what the charts are saying. So when we moved up here and then we started consolidating, everyone was, you know, well, not everyone, but a lot of people were very bullish, saying, hey, you know, after consolidation, you normally get a continuation, right? Which means price keeps moving in the direction it was moving before the consolidation. That's true, right? So you get this upward move, you get consolidation, and then you get another upward move. And there's actually a trade setup where you can actually do this A, B, C thing. But anyway, I don't want to cover that today. I'm not an expert on that setup. But essentially, you'll get a move, you'll get consolidation, and then you'll get a continued move that's equal to the length of the initial move, right? So, and it's really, it's almost just like a flag, really, right? So you'll have this move, which is X length, and then this move is supposed to be about the same length as this. That's essentially how it works. But the odd thing is right now, if you look at market sentiment, is people are calling this accumulation and they expect it to go up, or some people, right? People that are clinging to the hope that we're still in a bull market, which doesn't make any sense because in reality, we move down, we're consolidating, and ABC, right? Another move down is what we should expect. And if we do, where it's going to put us down, you know, around that $6,000 area or lower. That's just the reality of it. If this ends up being an ABC type of pattern, we're going much, much lower, guys. That's just the reality of the situation. So, you know, I'm not bullish. I'm certainly not even close to taking any type of long-term long positions. I still haven't bought back any of my Bitcoin, other than the Bitcoin I bought to put on BitMEX so that I could trade with it, which was, by the way, 2.5% of my portfolio. I don't know if I talked about that in the last video or not. So just in case if I didn't, long story short, I bought 2.5%. I put 2.5% of my portfolio into Bitcoin, and I put it on BitMEX because BitMEX doesn't trade in fiat pairs. It only trades with Bitcoin. So I had to put Bitcoin there to trade. And the reason I did 2.5% is because 2.5% times 25x leverage is 50% of my trade fund. So now I can do 50% trades over there without keeping more than 2.5% of my portfolio there, if that makes sense. Okay, but I am, you know, still waiting to buy back my HODL Bitcoin, if that's what you want to call it. Okay, still looking for the same levels that I've been looking for now for 3.5 months. And by the way, speaking of 3.5 months, guys, this week will make 4 months since Bitcoin topped in June. So if you are still clinging to the hope that we are in a bull market, or if you're still, you know, following people who are calling this a bull market, you really need to stop and think about that. This is not a correction. Okay, I mean, it is a correction in some sense because a bear market is nothing but a correction, right? It's a correction of a market that moved too fast. But this isn't your normal, like, okay, we're going to drop and then, you know, just keep moving up, continuation type of correction. This is a downtrend. Okay, I've only seen like 1 or 2 other people even calling it that, and I didn't see anybody calling it that before I did. I mean, not to pat myself on the back, but that's just reality. You know, if you look at the bear markets, there's 2 ways to look at it. You can be bummed out, you know, especially if you're holding Bitcoin, it can be kind of depressing and stuff. Or you can be excited about it, because the easiest way to make money in a bull market, right? Everybody knows this. The easiest way to make money in a bull market is just to buy and hold Bitcoin. Now, you can make more money if you're a good trader by trading Bitcoin in a bull market. But if you're just a terrible trader and you don't want to trade, you know, you can still make money in a bull market by simply buying and holding, because it does this, right? It just keeps moving up. Well, in a bear market or a downtrend, you can make a lot of money by simply opening a short and not touching it, right? It's the same thing. You just find the top or near the top, open a short, and then just don't touch it and just let it go as low as it goes. Now you might be saying, James, well, I didn't get in at the top, so am I screwed? Do I have to wait? You don't have to wait. You just need to find a proper entry point, right? Because you don't want to get stopped out. Like if you went short right here, you could be right? Maybe you went short at 7,800, okay? It's not that we're not going to go down to 4,000 or 5,000. We very well may, and I still think we will. But you probably would have already been stopped out if you're using a proper stop loss, right? If you went short at 7,900 and this thing pumped to 8,800, you know, you're going to get stopped out, right? Or you should get stopped out, okay? So you don't want to get stopped out of your trade. You still got to use proper risk management. But if you can find a good entry point, right, then you can just sit back and relax and just ride this thing as low as it goes. If you don't want to, you know, actively trade, meaning, you know, several times a week or several times a day. I'm an active trader. It's what I do for a living, right? So I can sit at my desk, you know, 10, 12 hours a day if I need to. You may not be an active trader. You may have a job, right? Or you may have another business that you run where you can't spend that time of, you know, that amount of time looking at the charts. Well, in that case, right, a person could have shorted right back here. You know, I'm not even going to say back here. Like, if you got this, great. There was a lot of reason that you could have shorted right there. You know, there was Fibonacci levels that definitely supported that short. In fact, let's talk about this. I don't want to get too long-winded, but I want to do some serious value in this video since I'm only doing a couple of weeks now. Let's look at a monthly, okay? You absolutely could have shorted this wick just by using a monthly candle, right? Look at this right here. See that? This was the monthly close for Bitcoin. It was the highest monthly close in the history of Bitcoin. It closed at $13,863. This candle topped out at $13,868. It went $5 higher than the highest close ever. So if you were wanting to short this, and by the way, I'm super depressed to tell you that I had no way to short this back then, or I didn't know I did. I didn't know, first of all, I wasn't trading on BitMEX yet because they don't allow US traders. And secondly, I didn't know that Kraken offered shorts for US residents. So I was doing videos where I was bearish and I was selling my own Bitcoin, but I wasn't actually opening any short positions back in June because I didn't know I could, right? That option wasn't there last year. During the bear market of 2018, I couldn't do that. So I didn't even know it was there. It was by sheer accident, a member of my Facebook group told me about it. And I was like, holy shit, you just changed my life, right? Because then I could actually start shorting Bitcoin, like actually shorting it, making money, which was amazing. But you could have shorted this thing. Right up here was the, we've talked about this in many, many videos, but if you haven't watched any of my other videos, this was the short zone, right? The golden zone, 61.8 to 78.6 fibs, right, on the downtrend. So bam, bounced right up into it. This would be where I would start looking for long-term short positions. On top of that, again, it matched up with the highest monthly close ever. Perfect short position. So if you went short right there and you just said, you know what, I'm not trading, I'm just going to sit here until it starts going back up, right now you'd be up about $4,600 per Bitcoin. $4,600 per Bitcoin. So let's say that, you know, you were trading with one Bitcoin, right? 4,600 bucks for doing basically nothing, right? You're trading with, say, 10 Bitcoin, you know, then all of a sudden you're talking about $46,000 for doing nothing, right? Really, really crazy stuff. You don't need to trade 15 times a day to make money doing this stuff. So now if we look at this, but let's say you missed that, right? Let's say you missed that one. Well, I did a post over on TradingView on July 9th saying that I thought this bounce, at the time it was around 12.5, I thought the bounce would stop around 13.1, right? And then move down. So let's say you missed this one. Well, you could have got in on this dead cat bounce because almost always you'll get some type of A, B, C correction after a big move, right? So you could have got in up here and again held it, and right now you'd be up right around $4,900 per Bitcoin, right? I think I did my math wrong on that other one. I don't remember what I said now, but anyway, you'd be up around, you know, almost $5 grand per Bitcoin, which would be amazing, right? So when this thing pumps up and gives me my next short setup, I'll open that thing up, I'll ride it until I think it's getting ready to bounce, I'll close it, and I'll just keep doing what I've been doing this entire 4 months. I'll be playing this bear market, you know, for maximum profit. But if you're a hodler and you only want to do position trades where you trade a couple times a year, well, all you have to do is find a spot where you've got a good entry and then just ride it until it finally stops dropping, right? How do you know when it stops dropping, right? How do you know? Well, if you look back here, this has kept putting in lower lows and lower highs, consolidated, fell down, right? Still no reason to go long on it. Came up, lower high, boom, higher low. This was the first sign that things might be changing. And then boom, higher high, right? So once you broke out above this neckline, right around 4,100 bucks, that would have been the entry point. That would have been where if you were short all during this bear market, that would have been where you could say, okay, it's time to close my short. Now you wouldn't have got as much money as if you had closed it back here in December at 3,200, but I'm pretty sure if you open a short at say 15 grand back here on this bounce, right, 16 grand, and then you close it at 4 grand, I'm pretty sure you'd be okay with that, right? I don't think you'd be too upset that you missed the exact bottom. That's what, when people say, hey, it's almost impossible to get the top or the bottom, that's what they're talking about, right? You want to wait for the reversal. And people asked me the other day, somebody asked me, they weren't being a smart aleck, they were just asking, am I not nervous that I'm going to miss out, right? Do I not want to buy back at least some of my Bitcoin on the way down in case it starts to go back up? No, I don't, right? I will not catch the bottom, guys. That's just a fact. I'm not going to catch the bottom. I'm not going to do that. I did catch the bottom in 2018, but there's a reason I caught the bottom. Because I kept trying to catch the bottom, right? I kept buying these dips, and then I wasn't selling the rallies. I just kept buying the dips. So yeah, it's fun and it's impressive when people find out that I bought Bitcoin at 35.75. It's like, holy shit, by the way, I also bought Litecoin within 30 cents of its actual bottom. That's all fine and dandy. But when you were wrong 4 or 5 times before that and you kept trying to buy the bottom over and over and over and it just kept falling, that's you end up losing a lot of money. I would have been better off not to buy at all in 2018, not to buy at all in December at the bottom, and then bought over here at 4,100. I would have missed it by quite a bit, right? 4,100 compared to 3,200, that's like 30% or 25%. It's a big difference, but it would have been a much safer entry, and it wouldn't have fallen, it would have went up, right? Same thing now. This thing is going to eventually find a bottom, and it's going to consolidate, and I'm going to be waiting, and it's going to start going back up, and I'm going to miss it, and it's going to come down, and then I'll enter it. And it won't be as low as the actual bottom, but it'll be a safer entry point for me. And then the reason that's so safe is because then I can say, okay, I want to stop loss below that. Let me show you what I'm talking about, okay? I know this is, hopefully you guys understand what I'm saying here. So when this thing broke out, right here, when it broke north, by the way, that was an ascending triangle. We talked about that in the past video. When it broke north right there, the reason it's so important to wait for a setup is because, see, then I could actually say my stop loss was right down here. I could basically say if it went in and made a new low that I wanted to get out of the trade. That way, if it fell down to like $1,000, I wasn't sitting there holding Bitcoin that I bought at 4,000 bucks. Because again, it doesn't sound like a lot. It's like, oh, it's only $3,000. It's 75%. If you bought it 4 grand and it fell to $1 grand, that would be a 75% loss, right? So when you wait for a market to turn the corner, you can use the low as your stop loss. Does that make sense? I hope it does. So that's what I'll be doing over here. Is this thing will eventually put in a bottom, right? Where it will be at, we don't know yet. And it will start to go up. And it's only after it goes up and then has a pullback that I'll actually enter the market. Or it might be that it puts in some type of ascending triangle like this, and I'll be able to enter on a breakout. Okay, but I won't enter a position just because price is XYZ. Like, even though I've been calling for like 4,200 for almost 4 months now, I have bids sitting at 4,200 and 4,300 actually, but I need to explain why those bids are there. They're not there because I'm just going to leave them there, and if they fill, it's like, okay, I don't care where Bitcoin's going. They're there in case a wick comes down and fills them, right? When we start getting down to like $5,000, we may see some crazy wick come down and fill those and pop back up. But if we start edging down there, if we're like at $4,500, $4,400, I'll cancel those orders. I'll cancel those orders to buy Bitcoin at 4,200 and 4,300, and I'll wait until structure comes in, right? It's just like when price was up here around 10 grand, I had bids sitting down here at 8,700. Well, when it started to fall, I actually canceled those bids. They didn't fill. I actually canceled them, and then I ended up buying down around 8,200 instead, and then I sold the bounce when it bounced back up to 8,700 right away. It was like an hour later it bounced. Okay, so let's just keep that in mind, right? Bear markets, trade them like bear markets. You can make a ton of money. You can ride the downtrend as low as it goes. And then you don't have to be so concerned about, oh my God, it's not going up. Oh my God, I'm losing money. I'm losing money. I'm losing money. Also, if you're a bull, I posted about this on Twitter yesterday. Let me just pull up the Twitter post. It's easier to kind of talk about it when you're looking at it. Okay, so here it is, right? If you had, if you don't hodl, if you just, are a trader and you get even close to the tops, some people don't want to sell their coins because they're like, I'm a bull, it's going to 100 grand, it's going to 100 grand, it's going to $1 million. But guys, if you had sold at 13.1K, right, I can't talk today. If you had sold at 13.1K and then bought back yesterday around 8 grand, you would have actually been able to buy back about 63% more Bitcoin than you sold. So if you're using the example of 1 Bitcoin and you think Bitcoin is going to 100 grand someday, that extra 0.63 Bitcoin could end up being worth 63 grand if you're right. If you think Bitcoin is going to be $1 million someday, an extra 0.63 Bitcoin would be an extra 630K, right? So risk management says that you should do that, right? Not now, obviously. I'm not saying that. I'm saying, like, if you're looking at risk management and you really think it's going to be worth $1 million, it's probably worth trying to accumulate as much as you can. Again, use proper risk management. Don't put yourself in a situation that you can't get out of, all that type of stuff. But me personally, I'm happy to trade this as a bear, and I'll continue trading it as a bear. It's funny, last week I had almost an argument with a guy on Twitter who was saying that this week was going to be bullish. Well, this weekly close, that ain't bullish, guys. That is not bullish. We are in a bear market. Please just, if you don't take anything else from this damn video, right, come to terms with the fact that we're in a bear market. Until something changes, until this thing reverses and starts putting in higher highs and higher lows, this is a bear market. That means that we are going to go lower until we don't. Okay? Just keep that in mind. All right? If you guys have any questions about the video, please be sure and let me know. Obviously, I would love to have more comments. That's one thing that's missing from the videos. I kind of thrive on feedback from people. I thrive on knowing that people are actually getting something out of the videos. And I don't get a lot of comments, so I'm not getting a lot of that positive reinforcement. And, so leave more comments, right? More comments, more interaction will equal more videos. As always, please remember, I'm literally some guy sitting in a spare bedroom, so nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment. If you enjoyed the video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel, and don't forget to check the description for links where you can follow me on TradingView, Twitter, and also where you can join my free Facebook group. This is James with Crypto Common Sense. Trade safe.